All right, all right. We're waiting a few seconds here while Facebook does its thing. Let me check, make sure we're live. It says we're live. Let me double back here, minimize that, and it looks like we're live. All right, get this volume down. Okay, so it is now Friday, a beautiful, beautiful day here in South Florida. And I just want to take a few minutes to go live. This particular live is entitled Common Tax Deductions That Could Save You Thousands. Now, I did a post yesterday evening. I did it in two of the MyEcon Facebook groups. One is Six Figures, MyEcon Group Success or Success Group, that has about 8,000, 9,000 members. And I also did that similar post into MyEcon Takeover, another 13,000 members. Now, that's just two of the groups that are out there. And a post I did concern wages. I would just encourage them because they're all business owners, home-based business owners, online business owners. And as business owners, the IRS gives us access to literally hundreds, hopefully you can read this, hundreds of tax deductions, probably reading backwards for you, but over 475 tax deductions for businesses and self-employed individuals. So I did one concerning wages, encouraging them to make sure by close of business next Tuesday, the 31st, that they got their final payment of wages into their children. And I'll talk about that in a second. So there's some common tax deductions that they're taught as soon as they become part of our program. And just six represents about $3,000 to $10,000 of tax savings annually. So I want to just show you some of the things that they're given. Unfortunately, I wasn't able to tag everyone because the system kind of times out when you take too long. So once I'm finished this, I'll go back and tag all the individuals that were in the group that made comments and wanted more information, as well as normal folks that I tagged. So first thing I want to do is I'm going to share my screen here. And in doing so, I want to bring up one of the documents that they're provided. All of our associates provided to help along with their training and their understanding of the different tax deductions they have access to. And this particular handout is called Common Tax Deductions or Quick Info Packet. Now, this one doesn't have all the updated forms in it, but the forms are the same. In fact, to show you at the end, what I'm going to do is I'm probably going to go to the IRS website and just show you a couple of them. But one of the first things we talk about in here, and let me make it clear, this program is about not only just about making money, but it's also about managing the money. So in other words, how do you keep more of that money? How do you save on taxes on that money? And then how do you multiply that money? How do you get that money working for you? So it's multifaceted. It's just about making some money online. It's an online educational tool, and they focus on financial literacy and entrepreneurship. So one of the first things we do is we share with them a publication that the IRS put out in 2005, and it was addressing tax refunds, big refund, big tax bill. And this particular one talked about some refund facts. It says federal tax refunds to individuals totaled more than 215 billion last year. So in 2018, there was a couple hundred billion in tax refunds that went out again. In 05, it was 1 million taxpayers got refunds. 80% of the workforce got refunds. That means they overpaid and IRS had to refund them that money they overpaid throughout the year with zero interest. Now that was in 2005. Well, guess what? In 2018, over 100 million taxpayers got refunds, again, representing 80% of the workforce. So what didn't happen between 2005 and 2019 that still allows over 100 million people to misuse their money, to overpay their taxes, to get no rate of return, no interest at all on their money? It's education. No, no, no. That doesn't mean that people aren't getting educated, because sure, more people today are college educated than they were in 2005. More people are technology trained and savvy than there were in 2005. But still, there's over 100 million people that don't have the specific knowledge about taxes, about how much money is coming out of their paycheck. See, they go on this bulletin that says, where does your refund come from? It comes from your wallet or your purse when you tell your employer how much to withhold from your paycheck. See, the IRS doesn't magically dip into your check randomly, just take some money out. No, you tell your employer how much to withhold from your paycheck, and they then forward it to the IRS. So this bulletin is saying that in 2005, 100 million hardworking Americans misfilled out their W-4 and told their employer to withhold too much money. Now, this goes on to say you might be using this extra withholding as a forced savings. I've heard people say that, well, yeah, it allows me to save. But Uncle Sam said they don't pay interest when they send you your refund back. So you'll be far better served if you put your money in your paycheck and then you put it in an interest-bearing account so it made money instead of losing money. Why do I say lose money? Because if it sits there and gets you no interest, but your credit card is charging you interest, you lost money. Your car loan is charging you interest, you lost money. Your mortgage is charging you interest, you lost money. So this is one of the first things we talk about when they come in business with us, the importance of maximizing their take-home pay so they have that money to work for them. Then we go on and talk to them about the W-4, the actual form itself. Now, this is a 2018, but I assure you the purpose is exactly the same. And the purpose of this form, it says, complete form W-4 so that your employer can withhold the correct federal tax from your pay. So that means you're telling your employer how much to withhold. So if they're withholding too much or too little, it's by how you fill this form out. Now, the IRS continues and says, consider completing a new form W-4 each year and when your personal financial situation changes, because they understand that this form affects how much money should be coming out. So what do they mean by that each year and when your personal financial situation changes? Simple. Let's say you was a teacher, and when you started teaching, you were single, no children. Well, a year later, you got married. Your personal and financial situation just changed. So now you're to go back in and readjust your W-4. Y'all then buy a house. Your personal financial situation just changed. So you should go back and refill out the new W-4. Y'all then have twins. So your personal or financial situation just changed. So again, you should go back in and recomplete your W-4. So they give us this guidance, but unfortunately, the masses, millions of us, never read it, so we don't get it. So the first page, the top part is instructions. The bottom portion is what we complete. Line 5 is the most important one, the total number of allowances. I hear people saying I have 2 dependents on my W-4. I'm claiming 3 exemptions. Well, this is an allowance worksheet. That's why one of the first things I do in my tax course is I provide definitions. So you understand the language of taxes. So when you understand the language, you know how to properly answer the questions. Now we go on and teach them about the second page, more instructions, but the third page has at the top the personal allowances worksheet. So this is based on your personal financial situation, answering lines A through H only. And based on how you answer lines A through H, it tells you how many allowances you should be carrying, which automatically tells the IRS or your employer how much to withhold from your paycheck. But in addition to that, there's a deductions, adjustments, and additional income worksheet. The IRS in this form wants to find out if you're itemizing, because there may be more money that you can keep into your check because you're going to get deductions on certain things. Interest off your mortgage, property taxes, itemized deductions such as charitable contributions, or you may have a business as some deductions, business deductions that's going to adjust your income, or you may make some additional income. It allows you to estimate those things. Bottom line, it allows you to come up with a formula which will give you the total number of allowance to claim there. So we go line by line with our associates to help them do that. So let me tell you this. This usually equates to an extra $200 to $800 going back into their paycheck. See, what would it be worth to you to go take a class for someone to teach you how to put $200 to $800 back into your household without working overtime, without getting a part-time job? One of my business partners and high school classmates, Steve Lewis, we did this, and he shifted just under $800 a month back into his household. $800 a month that for years he was sending to the IRS that he could have been using to take care of his family, building his retirement account, paying down debt, all those things. So it's life-changing information. It's actionable information that you can use right now. Okay, so let me throw you a little further in this particular document. So next, what we talk about after we finish walking through the W-4 is through some commonly used deductions and how they work. So business versus personal expenses. So we quickly explain to them, generally, you cannot deduct personal, living, or family expenses. However, if you have an expense for something that is used partly for business and partly for personal purposes, all you simply need to do is divide the total cost between the business and personal parts. Then you can deduct the business expenses or deduct as a business expense only the business part that meets what we call the rule being ordinary and necessary business expenses. So we teach you what the IRS means by that. These 6 common deductions here, most of you right here watching this have car, truck expenses. You already have that expense. But because you don't have a business, you can't gain the benefit of all the financial incentives that the IRS gives all of us. You know, those 9,000 people that are in the 6 figures My Iconz Success Group, those 13,000 people that are in that My Econ Takeover Facebook group, they travel anyway. Many of you are traveling right now. You're already at your destination. So you already incurred expense that you could have made tax deductible, but you only didn't know. You have a cell phone. You have internet access. You may be paying interest on your car loan. These are expenses that you already have. Now, you may not have wages because you don't have a business. But if you had a business just like ours, you could be paying your children wages for helping you in your business. I'm going to show you where the IRS says that you can do that right in this same document and reference the IRS publications that says it. See, you could have paid your children wages for using their pictures in your Facebook post, your Instagram post, the same way you would ensure that Nike compensated them if they did the same. You could be paying them. I see parents all the time with their kids helping them wash the car. Well, if you use your car partially for business, that's partially a business card. You could pay them for helping do that. Kids clean up around the house, so you could have them cleaning your home office or the section of the house that you use as your home office. There's so many things that you're already compensating your children for in the form of allowances, food, clothes, recreation that aren't deductible that you could be making deductible. Depreciation on your home office furniture, depreciation on your vehicle. See, these are expenses that you already incur, but you haven't positioned yourself so that the IRS can allow you to get the financial benefits of being a business owner. See, they want you to be successful in business. They want to give us these financial incentives so we can grow successful, profitable businesses. Why? You grow a profitable business, you pay some more taxes. That helps you and it helps the government because you made a profit. But guess what? You build this successful business, you may be having to hire employees. That helps the government with the unemployment rate. And I think the most significant one, most people today know that they're not retiring anytime soon. They don't even understand how it's going to possibly happen. But if you build a successful business that you deem is going to take care of you and your family for the rest of your life, it's a win for you and it's a win for the government because they don't have to worry about taking care of you. So that's why these incentives are so important. So the IRS only has 2 requirements though. They want you to operate your business with a profit intent, and I'm going to show you just how easy that is. And they want you to keep good records. I'm also going to talk to you about how easy that is very quickly. So now let's push on. Now, this excerpt is out of IRS publication 463. Let me show you. It's right here at the bottom. Now, this says 2017, but I assure you the 2019 version is the exact same. Go to irs.gov and then search publication 463 and then go under entertainment. It'll show you this here. So under transportation, and it shows you at the bottom here, it's chapter 2, entertainment, page 13. So it's about the exact same location. But what's most important, the IRS is showing you how you need to move to make the same commute you make every single day go from commuter miles to potential business miles. See, the IRS says clearly that if you go from home straight to work, straight to your office. The miles are never deductible. However, if you make a stop, Panera Bread, Dunkin' Donuts, Starbucks, coffee shop, somewhere where you have the ability to sit down, shoot some emails, pass out a couple business cards, check your social media, make some social media posts, handle your business 20, 30 minutes every single morning before you go to work. Then from your home to that stop, those miles become tax deductible. Some of you stop at Mickey D's every day anyway. Now you turn that into a business stop, but you'd have to have a business to do that. We can show you how to do that. But then as Cyrus says, from that stop to work is always deductible. So they show you how you need to move in order to make those miles tax deductible. We show you how to document that. So now, what happens if every single day in the morning you spend about 30 minutes or so working your business? And then when you go home, you do the same. An hour, 2 hours a day, every single day working your business the way you go to work on your job. You're eventually going to get good at it. You're eventually going to make a profit, just what you wanted to do anyway, and just what the IRS wants you to do. So that just talks about how you need to move, how the IRS is showing you how. They go on and talk to you a little bit about mileage, car expenses, whether you're using the standard mileage rate, which last year, 2018 or 2018, was 54 and a half cents a mile. 2019, 58 cents a mile. So it even went up. So you can take the standard mileage rate, but it goes on and explains to you actual car expenses. So if you don't take the mileage, you could also do depreciation, actual car expenses, licenses, gas, oil, tolls, lease payments, insurance, garage rental, parking fees, registration fees, repairs, tires. The IRS actually gives you a tip. If you qualify to use both methods, you may want to figure your deduction both ways to see which gives you the larger deduction. So they're actually here to help us. And this document is one of the first things we use to show them how, always referencing the IRS publications. Travel. See, many of you are traveling throughout the year. You're traveling now, but unfortunately, many of you aren't making it tax deductible, not because you're not educated. You're highly educated, but you're missing the specifics about finance and money, and in particular, taxes. How do you manage the money that you have coming in? How do you keep more of it? How do you make the travel you're going to take anywhere, the airfare 100% tax deductible, the hotel's 100% tax deductible, worst case, partially, 50% of your meals tax deductible. You have the ability to do it if you have a business. You just have to understand how to plan it, how to document, and we teach our associates how to do that. We teach you how to do that. Let's continue on. I only want to really highlight one more area because in that post, I talked about wages, hiring your children. Well, this says 2017 publication, IRS publication 15. I assure you, and I think what I'll do is I'll go to the irs.gov and I'll go to actual publication 15, chapter 3, family employees, and I will show you that it says under family employees, child employed by parents, payments for the service of a child under age 18 who works for his or her parents in a trade or business aren't subject to Social Security or Medicare taxes if the trade or business is a sole proprietorship or partnership in which each partner is a parent of the child. So that means you could pay your children for helping you in your business is 100% deductible to you. The money you just paid them, you buy their clothes with. You just got 100% deduction for the clothes because you got 100% deduction for the wages, for the food you buy for them, for their recreation, their little league, their football, their piano lessons, their airplane ticket to wherever you're going. They spend their own money. It becomes deductible to you. My friend Steve, when they go out to dinner, they pay for it with the wages that he paid them. When they take family trips, they pay for it. The kids pay for the trip. He pays them for helping him in the business. He documents them helping him in the business, gives them what their job descriptions are, what their title are, what they're able to do, and they happily help them in the business. See, the only reason you've been paying allowances, the only reason you've been paying car notes for your 16 and 17-year-olds and it's not being tax deductible is not because you're not educated. You're highly educated. associate's degrees, tech degrees, trade degrees, bachelor's degrees, master's degrees, PhDs, JDs, MDs, but not the specific knowledge when it comes to taxes and business related deductions. This is what we provide for our associates. All right, so wages and how that works, because in those two groups that I posted, and I talked about making sure that by close of business for banks next Tuesday, that they made their last payment for wages to their child. They got it in or got their account set up and made their first payment. All you have to have is a custodial account with your child's name and your name on it. It has to be custodial because they're too young, if they're under 18, to get accounts on their own. So it's custodial. So you maintain the debit card and you spend money on their behalf. Now, one child or three children can be on that same account. And when you make deposits in the form of wages, you can identify what portion of it is going to which child, or if it's all going to one child, you earmark it as wages, and then you document it. We give all of our associates an app called the Cash Flow Manager app that they're able to track all these expenses on their smartphone, tablet, or computer. We give them the technique, the planning, the strategy, tax planning, tax strategy, business strategies, so they can map out how to move properly in accordance with the IRS publications, exactly how to do it. So it's in compliance, it's documented with intent to make a profit, and legally, morally, and ethically tax deductible. And it results in savings. It results in better management of your money. We want you to not only to make more money, but to manage that money and then also multiply that money. So we have financial education, investment education, owning a piece of America. All of that is in the same system. So let me ask you, how much would you pay to go take a course to teach you how to keep more money in your paycheck, to teach you how to minimize your taxes legally, morally, and ethically, to teach you how to own a piece of America, how to get an ROI on your money? Also within the same program, it gives you a credit course, 26 videos, 12 modules, a step-by-step blueprint. See, how much would you pay to go get taught those things? Well, it's incorporated. All of that's incorporated in our system, and the training and the ongoing teach. You got Facebook groups that support. So it's all types of support or going, not get the information once and you're out there on your own. Bottom line is our system is designed to empower people with the knowledge and tools they need to improve their finances, to help them get to the level that they want to get to, really to become financially independent, become financially free, to build income producing assets that give them their 40 to 60 hours back, but still have enough income coming in to be able to maintain the family's lifestyle. You know, there were several individuals, and I'm going to tag them once this is over, but Vonda Bell, you're going to get tagged. So if you're a part of her Facebook group, you're going to see this information because she wanted you to see it. Dawn Slater, Dalvin Smith, Sherry Webster, B. Rodriguez, Angela Taylor Carter, Shirlene Harris. So you'll see all those folks. And I may also, with the permission of those group owners, also share this in the group so others can get it as well. But there are some specific individuals that raised their hand and said, I want to know how to do this. I want to get more information about this. And this is just one of the things that we do. So what I'm going to do is I'm going to stop sharing for a second, because I think documentation trumps conversation, because I can say these things and I can show some of it, you know, with copies of things that we have. There's always that skeptic or that know-it-all Joe and say, oh, it's not true, it's rigged. So what I want to do now is I'm actually going to go quickly to the IRS's website. So let's see if we can make this happen here. And I'm going to go on here just to double check to make sure that this is actually tracking. I want to make sure that we're getting all of this. And we're going to go to, let's go to www.irs.gov. All right, let's move my little picture out of the way here. All right, so let's make sure I'm there. Yep, we're going there. So now I'm going to search. Here we go. Publication 15, right? Now we're on the IRS's website. So you should see that URL up there. Now, publication 15, right here. It says about it. I'm going to go to it. All right. IRS publication 15 should pop up here in a second. And let me verify that it's doing just that. Absolutely, it's doing that. Okay, perfect. Now, you see here on chapter 3, it says family employee. So publication 15, circular E, employer's tax guide for use in 2020. You see that, right? Family employees, page 13. Let's click on that. It takes us to page 13. And look, what is it? Just what I had highlighted. Family employees, child employed by parents, payments for the service of a child under age 18 who works for his or her parents in a trade or business aren't subject to Social Security or Medicare taxes if the trade or business is a sole proprietorship or a partnership in which each partner is a parent of the child. So it's right there. See, so if we could go to YouTube, if we can go to Netflix, if we can go to Facebook, if we can go to Instagram, TikTok, if we go to all those other places, ESPN.com, all those other websites, we could have gone to the IRS.gov and gotten this information, but we didn't know to do that. That's just the most important part about it. We didn't know. It's like, first of all, you have to understand how capitalism works. And you can't expect your children, you have a young child, and let's say they're 5 years old, and you've never taught them how to tie their shoes, how to dress themselves yet. And maybe that's too old. Maybe I should say 4. I don't know. I'm not a parent yet. It's going to happen, but not yet, right? So you may have never taught them how to get dressed. And all of a sudden you yell upstairs and say, hey, in 30 minutes we're going to be leaving. Go ahead and get dressed, brush your teeth, get dressed, put your clothes and shoes on, come on down and we're going to be leaving. That's a setup. You never taught them how to do that. So to tell the masses to go to school, get a good education, go get a job, put money in your retirement account and everything's going to be okay is a setup because you've never been taught how a 401k, 403b, TSP works. You've never been taught how taxes work. Hell, 100 million Americans have their W-4 wrong. They're robbing themselves of valuable dollars. See, your dollars, your money has value. That's why the insurance companies want it, the retailers want it, the banks want it. They all want your money because they're going to use your money to make money. They're going to make your money multiply for them. But unfortunately, the masses weren't taught how to make their money multiply. So our program teaches you how to make more money, how to better manage that money. In other words, how do you keep more of the money that you're already making? How do you minimize your taxes and maximize your cash flow? How do you use some of those dollars that you bring back into your paycheck to put in your 401k, which turbocharges your 401k, your retirement account, but at the same time lowers your taxes because you don't pay any taxes that year on the money you put in there. How to take some of that money that you put back in your paycheck and pay down your debt faster, saving you potentially thousands of dollars in interest. See, understanding those dynamics. And when you're doing that, is bringing your credit usage down, which brings your credit score up. See, millions of Americans don't understand why their credit score just plummeted because they threw their credit usage out of whack by putting all those Christmas gifts and all that holiday shopping and spending and traveling expenses on credit cards. So they don't understand those dynamics. So they look to a company to try to fix something that they only can do themselves. See, the credit card company or the credit repair company is not going to pay your bills down for you. So that usage can't go down. Only you can do that. The credit repair company is not going to show you how to properly adjust your W-4 so you can put more cash flow in your paycheck to do those things. That's no knock on them because they have a position in the marketplace. They have a service that they provide. It's just that service doesn't do those things. Our program does. So now, bottom line is this. What would you pay to take a class just to go over, explain some of the things that I just talked about? How much would you pay for that course? How much would you pay for that semester that they stretch out? Thousands? You have the ability right now for maybe 10 days at the most, probably not that, to become a part of our program and to allow us to start teaching you that for $13.95. Shame on you if you don't want to get the knowledge and you take action right now. You deserve then to lose money. You deserve then to overpay your taxes if you don't position yourself and take action to do the opposite. See, guess what? When Trump put the tax laws into effect, He put extra money in there. But if your W-4 wasn't adjusted properly, you didn't get the extra 2 allowances per child, which would have been right into your paycheck. You didn't know. You didn't have the form filled out properly. So we are here to correct all of that. So if the person whose page you were on when you watch this, because I'm going to tag a whole bunch of people, message them, you want information, you're ready to get started. And then what they will do is send you a link to get started, and we can start helping you along with all these things. You'll get this document. You'll get videos supporting this document. You'll get my support. We do live webinars, live training, everything you need to be empowered, everything you need to have the tools to help you take your finances to the next level. Does not mean you're bad. Your finances are bad and you're in a bad situation. It just means you want to get in the next level. You want to learn how to take business trips to Colorado and then ski while you're there. You want to know how to take business trips to Trinidad and experience carnival while you're there. So you want to know how to take business trips to North Carolina and visit with some family during the family reunion while you're there. You want to know how to have dinner receptions that happen to be around Christmas time. You want to know how business luncheons that happen to be on a Saturday when you fire up the grill. See, it's a different mindset. You learn how to move a different way. So your actions become profit generators. Your actions become something that your habits change. So you document those things every single day, capturing more of these savings. So all of this design is to empower you with the knowledge and tools you need to win in a capitalistic society. So the job has a place. It's a blessing. It gives you dollars. It puts a roof over your head. It allows you to fund your business, allows you to fund your retirement account. But that alone doesn't give you access to all the financial incentives that the IRS gives all of us. That the IRS gives those 9,000 people that's in six-figure My Econ Success Group. There's 13,000 people that's in the My Econ Takeover Facebook group. It doesn't. Those hundreds of people a day that are taking action on this $14 offer to get the tools to change their life. It's Friday. Many of you are about to go to happy hour and going to spend more than that. But guess what? If you have this business, you can talk business while you're there, and 50% of what you spend on your happy hour becomes tax deductible. Because you're prospecting, because you're talking about the new knowledge that you just obtained. It's simple. Get the knowledge that's going to help you move the needle in your business. Also, if you're on my live feed, I have a Facebook group. It's called Tax and Cash Flow Hacks for Online Entrepreneurs. Tax and Cash Flow Hacks for Online Entrepreneurs. Go up and find me. So what we do is we discuss these tax strategies. This is what we talk about. So it doesn't matter what business you're in. You're in travel, you're in makeup, you're in nutrition, you're a yogi, you're a personal trainer, you're a life coach. You have to understand how to better manage your money. And that's what we talk about in there. Give you all these strategies, all these tools that you need to keep more of your money, to help get to the next level. So I invite you to come see me, come see us in our group, and we exchange, we share tax and cash flow hacks for online entrepreneurs. But click below, smash some hearts if you're watching this live, smash some hearts, hashtag replay. And we want to get you enrolled in My Econ. We want to give you this system, $13.95, and start giving you the knowledge that's going to help you move the needle. It's your dollars. We don't get the $200, $800 you put back in your paycheck. You get that. We don't get the thousands of dollars of tax savings. You get that. We don't get the return on investment that those extra dollars make that you put in your retirement account or that you invest in your business, whether it's for ad spend, marketing tools. You get that. We don't get the profit. You get that. We don't get the time that you get back to spend with your family. You get that. See, think about all that you're going to gain when you take action. If that doesn't motivate you, think about the thousands of dollars that you will lose and the earning potential of those thousands of dollars that you'll lose forever if you don't take action. Think about the fact that if you don't get this knowledge, who's going to give it to your children? The schools didn't give it to you. The Ivy League college didn't give it to you. The HBCUs didn't give it to you, so it's not going to give it to your children either. See, your children are home right now from Christmas break. Ask them to enter their classes, talk to them about taxes. To enter their classes, talk to them about the W-4. Ask them. The answer is no. The next semester, the next semester, the next semester, is still not. See, we're going to give them documentation. 475 tax deductions for businesses and self-employed individuals. I talked to you about 6 common tax deductions that almost all business owners have the ability to use. Home-based business, web-based business, online businesses, everyone. So it's super simple. So I want to thank you for taking time to watch this. Like I said, once I stop the live, I'll have to go back in and tag everyone. It was being super finicky and it timed me out and I had to start everything all over again. So I wish you all a very happy holidays, a happy new year. And you still have time to get in position. You still have time to also, if you're already in business, you have time to get everything, all your documentation ready. If you need help, reach out to me. I'm a tax and cash flow strategist. I can help you get that done. I can help you win come tax time. See, you don't win when you prepare your taxes. No, you win with what you do the 11 months leading up to it. It's tax planning and tax strategy, which helps you win come tax time. See, it's those 1,000 free throws and jump shots that Jordan took before practice and after practice that helped him win the championship. It wasn't just showing up at the championship. So just showing up to get your taxes done is not enough. And understand this, accounting and tax preparation is totally different from tax planning and tax strategies. How do I know? Because the things I'm talking to you about now, the person that prepares your taxes didn't have that conversation with you. Your accountant didn't have that conversation with you, didn't encourage you to position yourself to pay your children wages. They didn't introduce that concept to you because that's not what their job is. It's just accounting, not tax strategy and tax planning. That's not a knock on them. They just stay in their lane, and that's okay. I just happen to have a tax preparation business, but I'm also a tax and cash flow strategist. And primarily what I do is I help people put together strategies and tax plans that not only help them make more money, to better manage their money, and ultimately multiply their money. So thank you again, and we will talk to you guys very soon. Enjoy the rest of your holidays. Take care.